Greetings, investors, potential investors, non-investors. I'm Rob. That is Galen in the basement making brownies. That is Michelle upstairs in the gold vault making cash. And that is Chris in the far corner making history. We're talking about Medexus today. This is specialty pharmaceuticals. You got to be careful here with verbiage when it comes to pharmaceuticals because they are often specialized and there's a lot of regulations involved. So we got to be careful. They are MDP, okay, never mind, I can't think of it. MDP on the Toronto Exchange. They're
Mr.
in
Dr.
Bolton.
Perry?
There we go.
Dr. Perry.
I was going to say doctor too.
So Medexus Pharma. So the difference between pharma and biotech is important here, right? But biotech is, we've got a thing that we created through alchemy and we're putting it through the FDA process and it may get through and it may not. And it's very binary, right? So you're going through a process of like one morning, either your stock is dead or your stock is tripled. What Medexus is a company that takes existing pharmaceuticals and licenses them from other parts of the world to sell in the US and Canada. And as part of that process may need to run through the FDA, but it's a different process. It's not a yes or no. It's a, okay, more information, please. Maybe a little bit more information. Maybe go ahead and do a bit more testing if you need to. And eventually, you get to the yay or nay. But Medexus has a portfolio of products that they already sell. So they're not dependent on the existence of one thing coming or going. They've already, they've got a range of different medications that are already out there in the market, already making them money. Their most recent financials were just put out, 23 million in revenue this quarter, which is up from a year over year by 33%. Their net income their EBITDA a year ago was minus 7.3. Now it's positive 1 point something. So the turnaround in the last year has been really strong without this one thing that's going through the FDA approval, which is a drug called treosulfan. This is used in stem cell transplants, right? So it's a very specialized, very small market, but this drug is far superior, it seems, from the research to what is existent in the US for this kind of technology. So for mine, this is a process where eventually, considering treosulfan is approved in Canada, Europe, there hasn't been a country where it's been put forward where it hasn't been approved. I think that this is a case of if and not when, in my opinion. Currently, Medexus made $23 million in revenue in the past quarter. Stretch that across a full year, you'd be looking at nearly $100 million in revenue. It's a $59 million company, right? So right now, this is a deal where it's trading at almost half of its annual revenues, which is nuts, all right? That's crazy low. Tesla is like trading at 600 times its annual revenues. So Medexus is like less than half. So that's without treosulfan. If treosulfan gets approved, if and when, they expect that the drug that it's currently, that's going to replace is already making $120 million a year in revenue in the US. So if it comes in and knocks that one on the head and takes over even half that market, you're looking at an extra 50 million on top of the 100 million they're already doing for a company that is trading at half of that. Like to me, it's a gimme. Now, we've been talking about it for a while now. I guess the last 6 weeks or so, we've been preparing people that the financials were coming and that they were likely to look good and that they're looking good even without treosulfan being factored into it. But those financials coming out showing the company was not draining money, that it could stand on its own 2 feet with or without treosulfan, has the market pretty much jizzed. Over the last 6 weeks, it's gone from about $1.60 to $3. We've been walking you through it the whole damn time. Another Equity.Guru.
Yep.
MDP.
Yes. They are a client, NDP. And I joke around with made up initials and acronyms just so people remember them. But actually, in reality, the military is Mike Delta Papa. Huh? Did you know that?
I always objected to Mike.
Mike, I don't know. Mike Delta Papa on the Toronto Exchange out of Bolton, and it's Ken D'Etremont, who you can hear talking to Chris Perry on the website, among other conversations.
It's a good interview. You should check out that interview. It's I try to drag a few negatives in there like I usually do, but Ken knows his stuff, and really this is vindication for the last year.
Galen was watching it. In fact, he was the tech. What did you think, Galen?
Well, I'll tell you what I think of the company. I mean, Medexus Pharma falls into a slot with what's called specialty pharma. We've all been talking about specialization. There's actually a category called specialty pharma. And basically what these guys are acquirers and distributors of products that have already been approved. And basically they don't do any testing. They just bring it in, answer a few questions in terms of information, and use their own sales teams to distribute that product in a profitable manner. What's really nice about Medexus and specialty pharma in general, if it's done right, is that they scoop the in-between. Big pharma companies are only interested in drugs that do billions of dollars worth of business because they're carrying that through from inception to distribution. And so they need to recover all those costs. So these smaller drugs, as it were, even though they have the potential of making hundreds of millions of dollars a year, that's small potatoes. They don't even want to deal with it. They don't even want to look at it. So that leaves a huge opportunity for these companies like Medexus to scoop in there and acquire an active portfolio of drug candidates that basically are working drugs that they can actually put into the market and continue to grow, which is another nice thing about Medexus. None of these products have plateaued. Every one of them has growth potential. So they're grabbing onto these puppies on the upward swing. They're not grabbing something that nobody wants to play with anymore. As I said, the reason why they get in there is because A, they're smart, and B, the big guys just aren't looking there. That's not where they see anything. And so they find these nice niche drugs in a specialty market. And what that also means is that these drugs service a small population with a high margin. Also, that means that they don't have to spend as much to market these things because they're only talking to a few individuals to get these out on a market on a grand level. They don't have to hit every hospital on the planet to get these drugs out the door. They can talk to a few distributors on the hospital level or on the medical level or a few practitioners, and the drug is out there. It's working. It's doing its thing. So with a great deal of smarts, they can release these items with a minimum amount of effort. And the minimum amount of effort compared to what a biotech would do is, drastically less. There's no real financial risk to a certain extent if they know what they're doing in bringing this drug to market. It will go because it's already gone. So I like what they're doing. And as Chris said, they've shown that they have the momentum necessary to continue without the treosulfan, which in and of itself, as Chris mentioned, could add another $100 million to the deck in a year when they're already doing this much business and increasing it. All of the drugs that they're using for the most part, or they're selling, the Rupall, the Ixinity, all of these products that they have currently are growing and they're making money. This isn't a losing prospect. Unfortunately, the market got very concerned unjustifiably by hearing about the FDA going, we'd like to hear a little bit more about this product that you have called treosulfan. They assumed that this was a yay or nay situation, as Chris mentioned. They thought this was going to be, oh, it's gone, it's done, right? This is like, we just need a little more information. It already exists. The tests have already been done. They don't have to do anything other than collate this data and send it off for approval. And they're in that process. And basically, I'm not going to say that there's any crystal ball here to say that it's going to happen because the world, you can't guarantee anything, but it looks pretty damn good. And as Chris said, even if it doesn't happen for whatever wild reason that may arise, the company's already a going proposition. I like these guys. I think they know their business. I think they know their market, and they're carving it up. I like what I see.
And that's the perfect transition to Chartman in the penthouse apartment with the gold. That would be Vishal.
Yep, and just like Galen and Chris, I like what I see on the charts here as well. Just highlighting, you guys have probably already seen this in past shows, but that was the drop on the FDA submission or the FDA news about treosulfan. And I think a lot of the market is still looking at treosulfan, but we should also mention Gleolan, the other drug, which is also stated to be released in the US sometime very soon. And that's also going to make up a pretty significant portion of new revenue for Medexus. So I think that's another big catalyst that we can add on to the FDA resubmission and also the earnings, which was released on the day that we're recording this. If we go back, I'm going to zoom out here on the chart. And this is also something that we mentioned in the previous investor roundtable. But we were watching this $1.50 zone, which was basically lows we saw in 2020 back in March. And, we were pretty close to that level. We talked about this big wick candle on July 14th. We were telling viewers that, hey, this looks like a very good indicator that we might have a bottom here. We're very close to previous lows. We have a nice green wick candle. It does look like the buyers are stepping in. And then all my other criteria were met. We closed above my moving average. We took out basically what's called a lower high, which is essential for a downtrend. But when we take that lower high out, it means the downtrend is officially over and a new uptrend has begun. And that's really what I see here. I see a reversal in the markets. I have highlighted, and we talked about the $2.50 zone in the previous investor roundtable, because it was an area that held support many times going back to 2021, from August 2021 and also December, and then in the beginning of 2022. But we did break below that in May. And I did want to see price recover or reclaim that $2.50 zone. And you could see recently when we had the pop, there was actually about a full week or a week and a half of trading where we just couldn't climb above that 250 zone. And it just indicates that the market really, really knew that this was a major resistance zone. And usually you see breakouts from these major zones with a major catalyst. And the catalyst, of course, was the record earnings, right? Which was released just on the day that we're recording this. We see the stock closed, 17% for the day, 18% for the day. Big green candle. And to me, that's a strong breakout. You have now reclaimed to 250. We're almost hitting $3. And I think in the next few days, this momentum can be sustained. And the next resistance level I see is actually here at $3.50. And then we have much higher levels to reclaim, heading back up to $7. And again, that's what the stock was trading at when all the news, went pre-FDA treosulfan drama. And I think if that's all solved, we can easily be looking at $7 and much higher because of the positives with this company. And again, that Gleolan drug. So new uptrend to me looks like it's beginning. We've reclaimed a very important $2.50 zone. We have good fundamental news that just released and is also upcoming. Everything looks positive here, Rob.
Well, that's perfect, because we're going to see if you're going to spend the money as we speak. And Chris goes first, $7,500 hypothetical dollars. Do you ride the uptick?
All in, man. Like, this is a balance sheet darling. You can't have a functioning company that is covering its tracks revenue wise, that is showing great improvement revenue wise, that has a major potential upsizing in the next Q1 to Q2, that is trading at half its annual revenue, and think that that's where it should be. There's a lot of people doing coverage on this company that say it's worth anything up to $3, $6, even $13. And they've held that even through the FDA hiccup of a couple of quarters back. I think you put the money in today. Do I think that it's going to come back a little bit after the news of the finances is settled and we go into a slower news cycle? Maybe, but I wouldn't be wanting to miss out today's price, which is still, like, despite the fact that it's jumped 18% today, despite the fact that it's jumped 50% in the last 6 weeks, still a bloody good market cap if you're interested in value. I wouldn't want to miss that trying to get an extra 20 or 30 cents on the deal. Go all in. I'm going in all in right now, and we've got a little cash set aside, and putting our money where our mouth is. When the trading day hits tomorrow, I fully anticipate to be jumping back in.
Wow. Galen, yes, it is a client. Excuse me, it is a client. Mike Delta Papa.
It's a client.
It's a client. Puberty is a rough stage. Galen? Jumping in?
Sure. Following Chris's lead on this one, the company has tremendous momentum building right now. It's already a money-making machine, trades at a discount to what it's actually doing in terms of business. The guys that run it are smart as whips, so and very much experienced in their sector. They know what they're doing, and so this one shows all the signs of being a continually rising entity. I see this as being a great company to get into, and right now it's an opportune moment to see growth, not just sort of like real growth that you would typically get with something you would kind of gamble on. This is kind of like getting in on the horse tip before anybody else hears about it. This is an interesting play. So I'm going to throw the 7,500 in. I again don't worry about any kind of dips and falls in the meantime. It's like catching a falling knife. I know the long run it's going up.
And anybody who's on the fence should watch my Gauntlet interview with Ken D'Entremont and make your own mind up. I think, I tried to put his feet to the fire a little bit. We talked about mistakes in the past. We talked about misconceptions of the market. But all told, like if you get to the end of that interview and you don't think you want to put money into this company, then I'm a Dutchman.
I didn't know that.
Vishal, am I going to warm up the donger on the bell? What?
Ding, ding, ding. 7,500 for me as well. I'm going all in. On the technical side, that close above $2.50 with this current earnings news, it's very important for a technical trader. It's huge, and I've been watching and waiting for that. We have that. Fundamentals, positive, and I think it just gets better as we carry on and management is doing what they intend to do and what they set out to do. 7,500 for me. I think this is a good story, and I like everything I see.
Wow, back-to-back bells. All 22,500 bones of hypothetical simmer money is going into these last two companies, and this one, of course, Medexus. Mike Delta Papa, MDP on the Toronto Exchange out of Bolton, Ontario. As Chris mentioned, Ken D'Entremont. Could be a Montreal Canadiens left winger, but he's not. He's the CEO. We can't guarantee anything. We're pretty jacked. We're pretty pumped. We're pretty enthusiastic, but we still can't guarantee anything because we don't actually have a crystal ball or a way.
We've got a good track record, though, over the last
yep.
so long, especially considering the economy's been crap and people are hiding. Companies that we've been talking about are going the opposite way. So no guarantees, but also guarantees.
Past performance does not guarantee future results. Do your own homework, do your own research. But yeah, these are good. These are some kick-ass companies we've been talking about. And you're right. We are talking about some winners.
We've got a good track record.
When we've been coming through.
Not like the Washington Reporter.
Zing!
To the moon, baby.
Oh, jeez. This is 100x.
Oh, my God.
All right. On that note, for Chris and Vishal in the vault and Galen, pass those brownies over here. You done cooking those brownies yet? Get those brownies over here.
Wait, you said the Washington Reporter. You meant the Wall Street Reporter.
Sorry, the Wall Street Reporter. There is no Washington Reporter.
No. There isn't a Wall Street Reporter either.
Well, yeah, true enough.
One of those reporters.
Established 1843. Okay, right.
Yeah.
Sure.
Three Amtrak stops apart, maybe four. We'll see you all on the very next Equity Guru Investor Roundtable.